Alright guys, so today we're going to be learning about identifying market structure and trends. So this is actually important because it's going to help you make stop making bad decisions when you're getting into trades and actually getting in the market at the wrong time. So it's actually very simple. So let's just pick this little piece of data to work with, and then I'm going to go ahead and show you guys how to identify the trend. So the first thing that you actually look for when you're looking for market structure is first actually you have to know how the market moves. So when the market is actually bullish, it's gonna go like this: higher high, higher low, higher high, higher low, higher high, higher low. And that goes for the opposite. When the market is bearish, it's gonna go lower lows, lower high, lower low, lower high. So let's take this area for example, right? The first key point that you want to start with, let's start with this high right here. So we're gonna name it just high. It's a high, right? Because that's where we're starting. So what you look for is basically just you want to follow the market. Depending on what time frame you're on, you're gonna be able to identify the structure in every single time frame. So when we look at this time frame, right, we see a big push down right here up until this zone right here. So we can say at this point the market found a little bit of support. We can say that the market found support here, right? But then we can see immediately it pulls up and continues to fall, right? So this zone now becomes a lower low, a lower low. So this is now our next lower low. And then what happens after that? The market actually pulls back from that lower low. So then this will be our point of lower high. Why you ask it's a lower high? It's actually a lower high because it's lower than the previous high. So then we just follow along and then we see what happens here. It's a lower low. And then if we continue marking it up with the with this, what happened? It does a pullback and then makes another lower high. You just want to note that and then continue following along. You see a big drop here below this. As long as it's breaking below the next point, it's considered a lower low. So right here we could say lower low. And then what happens? It's the same pattern. You're just gonna keep seeing it. That's a lower high. And then it push up. So you could do this up until the point that the market actually breaks that high, that lower high. So right here we're gonna see lower low, right? And then what's next? From here we can see that the market push back here. That becomes our lower high because it's not it's below this last point. And then the market does a push again, boom, and then does a pullback, boom, and then continues with a push. But here we can see that things start to shift a little bit, right? So let's continue marking. This is our lower low, and then lower high, and then we see what? A lower low. But if we look at this high right here, right, what do we see happen? We see that from the last lower low, the market actually push and touches it. So this becomes now a double top, right? A double top. It's not exactly a break of structure because the market did not go above the last lower high, but then we can start recognizing patterns. So it makes a double top. So for the downtrend to continue, this market would have to actually break this last lower low. But what did it do? It actually failed to break it and found support right here. It found a level of support. So from there, this will become a higher low. And it's a higher low because it's higher than the previous low. It didn't break this, so it failed to continue the pattern, the downtrend. But it's still not exactly bullish yet up until it breaks this high. So this is a lower lower high, so this would become a high since it's a retest. This is a high. So in order for market to become considered bullish, it would have to break this high. So what then do we see? We see, boom, a big push. So we see a low, a higher low, a higher high, because it's past this high right here. So this becomes the next higher high. So from that point on, you could actually consider that the structure is broken from this point right here. The structure broke this high, so it's considered a broken structure. And then if we look at this wick, we can see a break right here and then a quick retest, boom, push up. Now it's going to continue as a bullish market, boom, and then we see a push right here, and from there it's just going to continue up until it finds a point of resistance. It could either break or maybe consolidate, but in simple form, this is really what you want to look for when you're looking for market structure. It's not too complicated, and you could just keep practicing this on all your charts on every time frame, and it's just gonna stand out to you. You're just gonna be able to spot like just market structure. Just go ahead for homework. You guys could just pick a chart, pick a time frame, and start marking your lower highs and your lower lows and your higher highs and your higher lows. Just make sure to follow if you guys want to see more simple content like this. I'm going to be posting more. Just leave a like if this video helped you.